Hi there, and welcome to my screencast focusing on bank reconciliation. So, what exactly is bank reconciliation? Bank reconciliation is the process of analysing and verifying the differences between the bank's records and the company's records and adjusting the financial records so that the cash balances of the bank and the company are equal. Hence, we reconcile the financial records of the bank to the company's records. The reasons why accountants do bank reconciliation is so they can confirm the accuracy of the cash balance records of both the bank and the company and determine the actual cash balance to be reported on the company's balance sheet. So, here are the steps on how to do a bank reconciliation. Step 1. Reconcile the bank balance to the actual cash balance. This is done by comparing the bank statement to the company's cash records and adjusting the bank statement's cash balance by adding the deposits in transit and subtracting any outstanding checks as of the statement date. Deposits in transit are deposits made by the company but have not cleared the bank, thus do not appear on the bank statement, while outstanding checks are checks distributed by the company but have not cleared the bank, thus do not appear on the bank statement. Here is an example of what reconciling the bank statement to the actual cash balance looks like. Step 2. Reconcile the company's book balance to the actual cash balance. This is done by looking at the credit and debit memorandum. The credit memorandum is an addition to the cash balance on the bank statement for items such as the collection of receivables, collection of interest or notes, and any errors made by the company. The debit memorandum is the subtraction from the cash balance on the bank statement for items such as service fee charges from the bank and dishonoured checks, which are checks that have been banked but there were insufficient funds in the drawer's account to pay. Here is an example of what reconciling the company's book balance to the actual cash balance looks like. Step 3. Adjust the company's book balance to the actual cash balance by preparing the adjusting journal entries necessary. The journal entries are based on the company's view, not the bank's, so the adjusted entries are based on the credit and debit memoranda. Here is an example of what reconciling the company's book balance to the actual cash balance looks like. So, to reiterate, Step 1 is reconcile the bank balance to the actual cash balance, Step 2 is to reconcile the company's book balance to the actual cash balance, and Step 3, adjust the company's book balance to the actual cash balance.
Created using Powtoon.